Well, we have two failed mergers to get to this morning, and we can start with Tribune. They are very different in nature, but Tribune, of course, perhaps the more interesting one, given what is the beginning of court action or litigation between the two parties. Not necessarily a surprise that this deal has also ended, given the FCC's objections to certain divestitures that Sinclair was making to actually meet their approval in terms of ownership of stations, because at least as Tribune would argue and argues in a complaint out this morning, that rather than taking a more certain and expeditious route to deal approval as contractually required, Sinclair decided in late February of this year to take a high-risk approach which involves selling stations to parties with significant ties to Sinclair's executive chairman, David Smith, and his family, coupled with joint sales and shared service agreements under which Sinclair would effectively control all aspects of station operations, including advertising sales, negotiation of retrans, for example, satellite operators, and therefore Sinclair would continue to reap the lion's share of the economic benefits of these stations, even though it was purportedly divesting them. That was the FCC's objection, why they sent it to an administrative law judge, and that is why Tribune is now saying you owe us $1 billion in damages. They're citing that as a reason of lost premium to Tribune stockholders and additional damages in an amount to be proven at trial, as they say here, seeking to recover all losses incurred, including but not limited to about $1 billion of that lost premium and additional damages. Pretty surprising end to this deal, and of course points up what many are saying are the continued concerns when it comes to regulatory objections, whether they be in the form of FCC here and these stations that were not really sold, they would argue, or whether it's in China in terms of antitrust, what we saw with NXP, or our own DOJ here, or our own Federal Trade Commission, which recently had some issues with divestitures as it related to Praxair and Lindy's potential tie-up. So it's not always easy to get a deal done, and perhaps even more difficult these days. I didn't even mention CFIUS, which also has reared its head many times of late.
You know, I know you guys talked about this in the last hour, but how feisty some of the language was in this suit with Tribune, and the way they really came out very strongly about the termination of this merger seemed unusual to me.
Yeah, the two parties are going at it now, and you're right. It is strong language in much of this complaint. In terms of what at least Tribune is saying was a complete breach on the part of Sinclair to actually execute what they should have under the merger agreement, which is to have divested these stations in a manner that would have been appropriate, at least what they say.